Hello traders, Nick Shaheen here looking at Alibaba stock. I had a question on, is it time to buy calls or stock? Is it time to go long? And they specifically mentioned if I should buy calls, call spreads, or sell puts or put spreads. Well, the answer is kind of, I could do both. It all depends on what I like to do. Now, first of all, before I forget, at the end there'll be if you don't subscribe already to this channel, it's free. At the end there'll be a pop-up. Just click on it. Now back to the chart. So this is a daily chart. First of all, as far as Baba's fundamentals, nothing against the company itself. I just don't like anything that has to do with China stocks because of the economic war that's going on between the US and China. So it is price to earnings 32, not cheap, 8 times sales, 8.5 times sales. So the PE is about half that of Amazon, but it's more than twice, almost 3 times as expensive from the price to sales than Amazon. So I'd rather pay higher PE if the sales growth is there, where this is not evident here. So it's not cheap. It's more expensive than Facebook and Google, I bet you. Twice as expensive as Apple-ish from just the PE perspective. So, and it also has headline risk from China. So back to the chart. Is it time to chase it? I don't like to chase. I mean, the time obviously was to risk here with a tight stop. But from here, at this point in time, if I wanted to chase up, meaning if I wanted to buy hopium of higher prices to buy this scenario, I'd rather wait for a breakout from this line. So the last time it failed was here. The last time it failed before that was here. The last time that was a big, okay, so let's mark it up. I can speak to it with a crayon. By the way, the markets are open, so I have my eyes on something else. So, okay, so fake out. There were a couple trades. They faked us out. Probably the May correction. Okay, so this was market fault. And then the earnings came and they weren't that good apparently, so it slid. But I can clearly see that there was an effort to battle it out here. And this candle right there, that one, that's the little doji, that little next to the dot, that little green body, huge tails on top that's indecision. So that one day they opened, they ran, they failed, they closed where they opened, they didn't know what to do, and then the next day they said, you know what, sell, sell, sell. And then here, not a surprise where they held, because that was the platform from which they ran all the way up there. Okay, so this is Mark 1, clearly. And this was an effort to get to it and failed. This was a perfect tag of it and failed. This was an effort, didn't even get as big as this and failed. So me, personally, I'd rather see an effort to actually succeed. On a daily basis, a close above the neckline would tell me something. Now, I'm not a technician, and this is not a perfect inverse head and shoulders, but it sure does look like one, a neckline that is being breached. Now, the bears tried to sell it. They tried and did a lot better. They tried again and failed to do as well as this time. So head and shoulders upside down. Inverse head and shoulders is usually bullish, and usually they run about that much. So clearly a lot higher prices, but I usually look left. I bet you they will face resistance right here and right here from this one. That's why I drew my zigzag, because I think they will stop here, fade, try again if they break out. So if I'm buying the stock for higher prices, buy high to sell higher. If I'm buying calls or call spreads in the options market, I would want to see a breakout above it. Today would not be the day. It's up almost 1% off the highs, but the whole market is up 1%. So, and there's a big gap below and a little gap here. So after a rally, I don't like to chase that much unless there's proof of continuation. So 18%, 15, let's call it 15% at least. I want to see continuation proof. The second leg would start above this. So at least, what is that number here? 180, just for a round number, and give yourself a few pennies on a closing basis. This is daily. So how else can I go long? I can go long by selling puts or put spreads. So if I'm able to buy bonds die. If I'm able to I'm short bonds. So if I'm able to own the shares here I should be able to own them at 150, right? Or 155. So there's a way of using the put options to go long a stock without actually spending any money. If I want to buy the shares now, I can go long in a different way. So if I wanted to buy 100 shares, I can sell a put options instead. I collect money at a level where I think I would want it. So if it's good at 170, it's really good at 150 or 60. So I'd look at an option and I can sell it and collect money today, so I don't even need a rally to profit. So that's the concept of selling downside risk into what others fear if I want to own the shares. Now, I never sell put options naked unless I can own the shares, because if the price falls through it, then I'm obligated to buy those shares I say I want to own at that price. So if it falls to zero, I'm on the hook from 150 or 160 or whatever put I sold. The good news is time is on my side. When I sell a put option, tick tock, it's money in my pocket as long as price stays above my level I sold. So I don't even need a rally. In fact, if I sell a 160, I would even be safe on an 8% dip. So it can fall 8% and I still don't lose anything. It would have to fall below my line that I sold by more than what I collected. So if I collect $1, then my break even would be 159. Now these numbers I'm shooting out, they're not actual trade alerts. They're a concept. I have not checked the premiums. This just came up in my head right now. So where would be a good stop if I go long? If I buy, then it all depends on my personal preference. So now there's a gap here, so I expect to fade down to here. It wouldn't surprise me. So let's go a little more granular. So this is a 4-hour chart from the daily. It doesn't tell me a lot more. Okay, so this tells me to wait even. So I look at this candle right here. So this range right there is important. 175.8, my eyes are going away, and 178.5. So we popped into it and back out of it. I don't like that. So this would be a first stop out when it comes back to the neckline and then falls below it. I think if it loses 171.3, 0.4, that's a moving target, then the sellers will get a hold of it and they'll price it all the way down to 167 and change. I'm not saying that's where it's going. I'm just saying those are the stops. So if I want a tight stop, I'd put 172 and change. But that depends from person to person. Another place to put it would be 171, because then the gap is going to fill to 168. So it all depends on the personal and how long of a trade I'm looking at. Another bug out level obviously is this one, because then that just opens the door for another conversation. All right, so these, let me see, any more on the 30-minute? Yeah. So 173.8, 0.75, 0.6, it's a moving target, keeps changing. So no, nothing new. So these are the thoughts on Alibaba, and I just showed you how I would approach any chart from start to finish. We started with a daily chart, with looking at the macro, looking at what affects this stock, what I like, what I don't like, where the opportunity is, and how I would pursue it in many different ways, and depends on how I would pursue it, where I would put my stops. So if I wanted to own the shares and I sold a put, then I don't worry about a stop, because the end result is I got paid to own the stocks at an 8% discount from today's price. So that's the worst case scenario when I sell a put. So if I sell the put at 160 and I collected $1, again, these are fictitious numbers. I have not checked what they are. Say out to October or November, whatever, and it falls to it, then today I collected $1 for the privilege of owning the stock at an 8% discount. So from today. That's just how I would put it in plain, simple English. Yeah, that would be trouble if I didn't have the money to buy it, or I didn't really want to own it. Period, end of story. If I don't want to buy it, then I'll sell a put spread. So I would sell the 160 and buy one below it to limit my maximum. This way, if it goes to zero, I know exactly what's the maximum I can lose. All right, Nick signing out. If you have any questions, let me know.